Between February and November 2024, the world's wealthiest individuals did something that should terrify every single person with a retirement account. They didn't just sell some stock. They executed a coordinated $50 billion exit strategy that set off alarms across Wall Street. Jeff Bezos dumped $13 billion of Amazon. Mark Zuckerberg sold $9 billion of Meta. The Walton family unloaded $2 billion of Walmart. And perhaps most terrifying of all, Jamie Dimon, the CEO of JP Chase, sold stock for the first time in his entire 18-year tenure. I need you to understand what this means. These aren't day traders panicking over a headline. These are the architects of the modern economy. Bezos has held Amazon through the dot-com crash, the 2008 crisis, and COVID. Jamie Dimon has seen every financial disaster of the last 2 decades. And in all that time, they never ran for the exits like this. These men don't operate on feelings. They operate on data. They have access to real-time economic information that you and I won't see for 6 months. And right now, that data is screaming one word: get out. This isn't tax planning. This isn't buying a yacht. This is an exodus. The smart money is cashing out at the top, leaving the retail investor, you, to hold the bag when the bubble bursts. They are using the exact same playbook they used in 2007, right before the market crashed 57%. In this video, I'm going to show you the 5 historical patterns that prove insider selling predicts crashes with 100% accuracy. I will show you the specific hidden metrics these billionaires are seeing, and I will tell you exactly what you need to do to protect your wealth before the window closes. Because the pattern says we have 6 to 18 months before the music stops. Before you dismiss this as just rich people diversifying, you need to understand the legal cheat code that these people possess. It is called information asymmetry. When you or I buy a stock, we are looking at quarterly earnings reports that are already 3 months old. We are driving looking in the rearview mirror. But Jeff Bezos doesn't look at old PDF reports. He sees Amazon's daily sales volume, real-time margin compression, and cloud computing demand today. Jamie Dimon doesn't guess about the economy. He sees the real-time credit card default rates of 80 million Americans. They see the storm forming on the radar before the first raindrop hits your roof. And when they see the storm, they don't tweet about it. They sell. There is a specific metric that tracks this, managed by a firm called the Washington Service. It is the insider sell-to-buy ratio. In a normal year, this ratio sits around 2 to 1 or 3 to 1. That means for every dollar insiders spend buying their own stock, they sell about $3 worth. This is healthy. Executives get paid in stock. They have to sell some to buy houses, pay taxes, or buy yachts. That is business as usual. But when that ratio spikes above 5 to 1, it is a warning. When it hits 8 to 1, it is a screaming siren. So, where are we right now? In 2024, the ratio hit 9 to 1 for the year. In certain months, it spiked as high as 12 to 1. Insiders are selling $12 of the stock for every single dollar they are buying. They are dumping shares at a pace we have not seen since exactly 2007, the year before the global financial crisis destroyed $16 trillion in wealth. They are looking at the valuations, they are looking at the internal data, and they are deciding that cash is safer than their own companies. This is the part of the game that makes me angry. The elites have a radar system that you don't have. But that is why I started this channel. I want to give you that radar. We are building a community of insiders who track the smart money instead of following the herd. We are currently racing to hit 1,000 subscribers by December 31st, 2025. If we hit that goal, I am going to release a killer video. This is a script I have already written that exposes the specific mechanisms the elites use to rig the market during a crash, the plunge protection team, and the dark pools. I'm afraid to upload it because it exposes the plumbing of the system, but if we hit 1,000 subs, I will take the risk. So if you want the full truth, hit that subscribe button right now. Now, let's look at the specific sale that scares me the most, the one that hasn't happened in 18 years. Let's break down the roster of the Exodus because the names matter. Jeff Bezos selling $13 billion is huge, but you could argue he just wants to fund his rocket company. Mark Zuckerberg selling $9 billion is massive, but maybe he is just funding his AI projects. But there is one name on this list that has zero innocent explanations. That name is Jamie Dimon, the CEO of JP Chase. Since taking the helm in 2005, Jamie Dimon has been the ultimate hodler. He steered the biggest bank in America through the 2008 financial crisis, the European debt crisis, and the COVID crash. And in all those 18 years of chaos, he held onto every single share of JP stock he was granted. He famously told investors that when a CEO sells stock, it signals a lack of confidence. He structured his own pay to be stock heavy to prove he had skin in the game. He was the captain who refused to leave the ship. But in February 2024, that changed. For the first time in nearly 2 decades, Jamie Dimon sold 1 million shares, cashing out about 150 million. The official explanation was financial diversification and tax planning. Don't make me laugh. Jamie Dimon is worth $2 billion. He has had 18 years to diversify. He didn't suddenly wake up in 2024 and realize he needed cash for groceries. He sold because he runs the largest bank in the Western Hemisphere. He sees the internal data of 80 million credit card holders. He sees the commercial real estate loans going bad. He sees the corporate bankruptcies before they hit the news. When the man who sees everything decides it's finally time to cash out, it isn't estate planning, it's a fire alarm. He knows the banking sector is sitting on $1 trillion time bomb of bad debt, and he is taking his chips off the table before the explosion. If the captain is grabbing a life vest, you probably shouldn't be buying a ticket for the cruise. But if Dimon isn't enough to convince you, just look at the historical track record. Every single time insider selling hits this level, the market does the exact same thing. This isn't just about one bank CEO. It is about a pattern that has repeated with 100% accuracy for 50 years. The data from the Washington service shows 5 specific red flags that always appear before a major crash. And right now, all 5 are flashing at the same time. Pattern number 1. Insiders always sell 12 to 24 months before the top. In 1987, insider selling spiked 350% in the spring. The market crashed in October. In 2007, selling hit a record $650 billion. The market collapsed in 2008. The insiders are always early. They leave the party while the music is still playing, leaving retail investors to clean up the mess. Pattern number 2. The tech sector leads the exodus. In 2000, tech executives dumped their shares while the Nasdaq was still soaring. They knew their companies had no profits. Today, tech insiders at Nvidia, Meta, and Oracle are selling billions into the AI hype. They know the valuations are detached from reality. Pattern number 3, the no new highs rule. Since 1975, every time insider selling exceeded $400 billion in a single year, the stock market failed to make a new high for at least 3 years. In 2024, selling hit $464 billion. The math is brutal. If the pattern holds, the S&P 500 will not see a new record high until at least 2027 or 2028. We are standing at the peak of the mountain, and the only way forward is down. The billionaires aren't guessing. They are looking at specific hidden metrics that act as a crystal ball for the economy. And once you see what they see, you will understand why they are running. So, what exactly is on the radar screen that has terrified the masters of the universe? It isn't just vibes. It is 3 specific data points that have historically signaled a depression-level event. First, they are looking at the Buffett Indicator. This is Warren Buffett's favorite metric, the total value of the stock market divided by the GDP of the US economy. Historically, a healthy market sits at 100%. If the market is worth more than the economy, it's a bubble. Right now, that indicator is at 185%. It has never been this high in history, not even in 2000. It implies that stocks are valued at nearly double what the actual economy produces. The only way for this to resolve is for stock prices to collapse by 50%. Second, they are looking at the Shiller PE Ratio. This measures price to earnings over a 10-year average to smooth out volatility. A normal reading is 17. Right now, we are at 34. The only times in history it has been this high were 1929 and 2000. Every single time this metric crosses 30, a crash follows within 24 months. It is a mathematical certainty. But the third data point is the one you can't see on Yahoo Finance. It is their internal proprietary data. Jeff Bezos doesn't need to wait for government reports to know if a recession is coming. He sees Amazon's daily sales volume. He sees that consumers are switching from name brands to generics. He sees that cloud computing growth is slowing down as companies cut costs. Jamie Dimon sees the real-time default rates on 80 million credit cards. He knows that the American consumer is tapped out, living on debt that is about to reprice at 25% interest. They aren't guessing about a recession, they are looking at the receipts. This brings up a difficult question about loyalty and leadership. These men built their fortunes on the backs of the American economy. Now, at the first sign of trouble, they are pulling their capital out to protect themselves, likely triggering the very crash they fear. So I want to know where you stand. Do you view these billionaires as smart money for protecting their own assets? Or are they traitors for abandoning the ship before the passengers can get to the lifeboats? Go to the comments and type smart or traitor. I read every comment, and I suspect the answer depends on whether you hold the stock they are selling. But selling is only half the strategy. The real genius and the real evil is how they plan to buy it all back. Here is the dirty secret that separates the billionaires from the millionaires. When Jeff Bezos sells $13 billion of Amazon stock, you think he is cashing out. You think he is leaving the game. You are wrong. He isn't leaving. He is reloading. He is executing the first half of the round-trip trade. This is the mechanism that allows the ultra-rich to double their ownership of the world without doing a single day of extra work. Here's the math of the heist. Bezos sells his shares today at $280. He puts that $13 billion into treasury bills earning 5% interest. He waits, he lets the recession hit, he lets the credit bubble burst. When the market crashes and Amazon stock falls to $90, a 50% drop, which happened in 2000 and 2008, he takes that same $13 billion and buys the stock back. Because the price is half off, he can buy twice as many shares as he sold. He ends up with more control of the company than he started with, and he profited from the interest in the meantime. He didn't lose confidence in Amazon, he just refused to hold the bag while gravity did its work. This is the definition of a wealth transfer. Who is buying the shares that Bezos is selling right now? It isn't other billionaires, it is passive index funds. It is your 401k, it is the pension fund of a teacher in Ohio. The system is designed so that the dumb money, institutions and retail, provides the exit liquidity for the smart money, insiders. They sell to you at the peak, wait for you to panic sell at the bottom, and then buy your shares back for pennies on the dollar. It is a pump and dump scheme legalized by the SEC. I bet you have a friend who repeats the Wall Street slogan, time in the market beats timing the market. They tell you to just dollar cost average and never sell. Do them a favor. Share this specific timestamp with them right now. They need to understand that time in the market is a rule for sheep. The wolves, Bezos, Zuckerberg, Dimon, are absolutely timing the market. They are timing it to perfection. And if you don't wake up to this reality, your retirement account is going to be the fuel for their next super yacht. But you don't have to be a victim. You can copy their trade, you just need the right checklist. So, what do you do when the titans of industry are running for the hills? You don't panic, you prepare. You can't stop the crash, but you can position yourself to survive it and profit from the recovery. The playbook is simple, but it requires discipline. Step 1. Raise cash. If you are 100% invested in stocks, you have no dry powder. The billionaires are raising cash so they can buy assets when they go on sale. You should consider doing the same. Cash isn't trash during a crash. It is the most valuable asset on earth because it buys you freedom. Step 2. Hold insurance. When the Fed eventually prints trillions to save the system, and they will, the dollar will devalue. This is why central banks are buying gold. Having 10 to 15% of your portfolio in hard assets is your hedge against the money printer. Step 3. Build your buy list. Identify the companies you want to own. Apple, Microsoft, Visa, and wait. When the crash hits and they fall 40%, that is your moment to strike. The signal has been sent. $50 billion in insider sales is not a coincidence. It is a siren. The pattern from 2007 is repeating. We are in the danger zone between Q3 2025 and Q2 2026. The only question is whether you will be the victim who provides the exit liquidity or the shark who waits for the blood in the water. This brings us back to our mission. We are tracking these insiders every single week. We are building the only community that refuses to be the bag holder. And we have a goal. We are racing to hit 1,000 subscribers by December 31st, 2025. If we hit that number, I am going to release the killer video. This is a script I have already written that exposes the specific market manipulation tactics used by the plunge protection team to rig the market during an election year. I am genuinely afraid to upload it because it attacks the mechanism of the system itself. But if we hit 1,000 insiders, I will take the risk. Before I let you go, I want to talk to you directly. Just you and me. I know it feels lonely to be a bear when the market is at all-time highs. Everyone around you, your friends, your coworkers, maybe even your family is celebrating. They are looking at their account balances and feeling rich. And here you are, watching a video about a crash. It makes you feel like the crazy one at the party who is checking the fire exits. But I want you to remember something. Noah looked crazy building the ark until it started to rain. Jamie Dimon isn't crazy. Jeff Bezos isn't crazy. They are simply awake. They know that trees don't grow to the sky. And the fact that you are still watching this video tells me that you are awake too. You have a gut feeling that something isn't right with this economy. Trust that feeling. It is your survival instinct kicking in. You don't have to be scared of the future if you are prepared for it. We are going to watch the data together, we are going to ignore the noise together, and we are going to come out the other side stronger. So, if you trust me to keep watch while the rest of the world sleeps, hit that subscribe button. Let's get ready. Class dismissed.